what happens, just you know this, everyone, we know this in a very detailed way, that Assalamu alaikum Gaita, how are you?
I'm good, alhamdulillah. How are you, sir?
Alhamdulillah. Is that you have the cash and you have the credit sales. These credit sales will be converted to receivables, and these receivables will be converted to cash. Receivables, we have to be very careful. Okay, what are the procedures we are going to get at the end of the things? As simple as that. Very simple. At the end of the month, we will get a bank statement. Is it? At the end of the month, we will get the bank statement. When we get the bank statement, we know how much is the credit balance and how much is the debit balance. How much is the debit balance and what is the closing balance is there. Receivables are also the same thing. We are doing the sales for multiple customers. When we are talking in terms of sales to multiple customers, what will happen? You are going to have a receivables control account. Okay, you will have a receivables control account. As simple as that. Every customer, everywhere, they have a control accounts. Control accounts is nothing but customer specific account. When you do the things, we are very much concerned about it. At the end of the month, how much we have sold, and how much at the end of the month, how much we are receiving. Is it? We have done receivables collection period. Is it? In terms of days, or receivables turnover in terms of times. Okay, in terms of time. What the auditor will do whenever they will come across receivables? What are the procedures? Anyway, what are the procedures? Procedures will be multiple. Audit procedures. External audit. Audit procedures is done by external auditor in terms of receivables. And as simple as that, you will have the confirmation. If I am saying that I have to get 20,000 reals, the other person should also say that yes, I have to pay you 20,000 reals. My receivables and their payables should get reconciled. Is that should get reconciled? Then only it will work. The procedures which you are doing for the receivables as well as now when you are talking in terms of your clients to whom you have sold, is it? You have to sold. We have done in one of the cases the third party confirmation, the external confirmation, the internal sources as well as the external sources. Is it right? The external sources are more reliable than internal sources. Is that the external sources are more reliable than we have to get direct confirmation from the accounts receivables from the other party. Other evidence with respect to receivables and prepayments. See, it happens whenever there will be a sales. In some cases, there will be advance payments. Is that there will be advance payments? Advance payment. Then there will be what? There will be payment during the sale. Is that during the sale there will be payment, and they will be have a final settlement. Is it? You can distribute a payment under three different stages. You will have a advance payments, you will have a during the sale, and you will have a final settlement. What are the evidences we have to take into consideration whenever you are doing audit procedures? You are talking in terms of the completeness and occurrence of sales. Unless until there is no sales occurred, we cannot have the right to say that this amount is receivable. What are we are doing? What are the audit objectives and audit procedures in terms of what? in terms of closing balances. In terms of closing balance. These are the things we will cover in short, okay? Very small. Statement of financial position. You will have receivables, you have paid in advance, payment, paid in advance. Statement of profit and loss account, what will happen? You will have revenue will be there. You will, what we are doing whenever we have the receivables, is it? Whenever we have the debtors, okay, what we will do, you will say the provision, is it? Provision for doubtful debts, is it? Provision for doubtful debts, is it? We will take this, we are going to do as per IS 37, and it is only an estimation, is it? It is only a estimation. Then you will show the net receivables. Is it? You will showing the net receivables. Is it? This is what we are saying. Revenue is nothing but the sales minus irrecoverable debts as a expense. As a expense, it will be treated as a estimated losses. Understand point? It is not actual losses. It is only a estimated losses. You will get a direct confirmation from the external parties, your clients, and you will have other evidence which you are going to generate internally. Is that same thing? We are talking in terms of what? We are talking in terms of substantive procedure. But here we are talking substantive procedures in terms of receivables. Yeah, receivables is always a material balance. Is that? See, if somebody is going to pay you, whether it is 10 reals, whether it is 50 reals, or it is 500 reals or 5,000 reals, money is money for everyone. Is that? All maybe a material balance statement. They are usually audited with respect to test of details. They go in depth, okay? They will go in depth, and in some cases they will do analytical procedures. Analytical procedures is nothing but similar to our ratio analysis. Debtors turnover period, is that? Debtors turnover period, is that? When we are talking about debtors turnover period, we are talking about how many days we are going to cover. Next, when we are talking about the analytical procedures, what will happen? We also take what happened prior year and what happens in the current year. Sales can be tested at the same time as receivables. Is that? Now you have the similarity between, means definitely when we are talking about the receivables, for the receivables, what is the source? Source is the sales. Is that? For the cash, what is the one of the, see, for the cash, one of the source is your receivables. Is that? One of the sources. Now the sales can be tested at the same time. Existence, one, is that? You have the existence, completeness, and valuation are the key assertions. Existence has to be there as sales is occurred. Completeness, we have to take everything from into consideration, and we have to value. Valuation is any estimated losses, any irrecoverable amount we have to deduct from that. Is that? Occurrence, completion, and accuracy are the key financial. This is for the receivables and this is for the sales. Value, when we are doing the valuation, is that? When we are doing the valuation, we will take IS 31 in terms of provisions. when we take the accuracy, is it right? What will happen? See that you will have the sales, you will have the discounts, is it? You will have the returns, is that you will have the return. Definitely there will be a conflict, okay? Always there will be a conflict, and in the examination questions it has been stated in that way also. There will be a conflict that yes, we have delivered it and they have not received it. We have delivered the products but it has been damaged. Then how much they will pay? Some payments will not be settled, is it? Some payments will not be settled over a period of time. Then there should be a reason why it has not been settled. Is it? These are the things which you are talking in terms of occurrence, completeness and accuracy. Fine. What are the audit objectives? Okay. When we are doing the revision, okay, when you are doing the revision, you focus on this. Same thing, if I remember, I have sent it in the Word file also. Is it? Now, what it says, all sales transactions should be recorded. First and foremost, the first step will be recorded, occurred related to the entity. Is it? What happens? It should be in the name of the entity, sales invoices. All transactions should be recorded, has been recorded. Have been means completeness. Once you are saying it has recorded, it is not, we have to reconfirm that it has been done. Okay, that is the reason. What will happen? Somebody will prepare, somebody will enter, is it? There will be some entry and there will be some verification. Preparation is occurrence. Entry and verification is completeness. I am entering, but somebody will verify, somebody will approve, somebody will authorize, somebody will say that yes, it has been done. Is that amounts relating transactions have been recorded appropriately, accuracy. Is that in terms of what? In terms of quantity, in terms of price. You will have the total. All transactions recorded in the correct period. Otherwise, what will happen? There will be a misleading. The last year sales will be recorded this year, and this year sales has been recorded in advance. It happens in all the cases, isn't it? That has to into a cutoff. And all transactions have been recorded properly. Classification. When we say classification is a very broader term. Okay, classification is a very broader term. When you are talking about the receivables, is it? When you are talking about the receivables, definitely we are classifying as per the clients. We are classifying as per the products. We are classifying as per the services. Is that we are classifying the things as per the requirements, okay, properly. Is that this is what the first 5 assertions, is right, with respect to classes of transaction. It has to the sales has to be occurred, and the sales have been recorded. Completeness, it should not, the transaction should be recorded once it is done, and the transactions has been recorded as recorded. Is it 1, 2, 3, 4, 5 sequence wise? Okay. Third one is it should be have recorded with respect to the amounts, accuracy, cutoff and classification. The first one is a, see, now I will tell you in advance. In some cases you will come across most of the things similar in nature. But they will not ask you this. They will give you a scenario. Based on the scenario, you have to have a response. Is that with respect to the period, about account balances at the period, closing balances. Is that closing balances? What is the closing balance? If you are showing closing balance, the closing receivables should exist. You are going to showing the closing balances. Is that whatever? If assume we are going to show closing balances of 9,428, it should exist. Means this 9,428 should be either from the one party or from the multiple parties. Okay, that is the first thing. The entity controls the right to receivables. When you are saying 9,004, I am giving just an example. Okay, 9,428. Just I am giving a small example. Means you have the right to receive that amount. Understand? You have the right to receive that amount at the end of the closing period. Means if you have receivables this period, next year you are expecting that it is going to be received. All received should be recorded, have been recorded. Completeness. Somebody is recording, one person is recording, another person has to reconfirm. When we are doing reconfirmation, then only it is going to be lead to completeness. Receivables are included in the accounts of the correct amounts in terms of valuation or allocation. Either you have the things X, Y and Z. 3 customers are there. Is it right? You should know whether whatever the X is going to be 10,000, Y is going to be 2,500, Z is going to be 3,000. Then you have to say that it is going to be 15,500. Is that there should be a valuation and there should be allocation. Is that individually as well as aggregately. Is that this is the second one. What is the third one? We are talking in terms of presentation and disclosure. See, the receivables are the ones if even there is some mismanagement in that, definitely it will have repercussions. Is it right? All disclosed events and transactions relating to receivables should have been occurred and pertain to the entity. Occurred and pertain to the entity. Pertain to the entity. What we are doing? We are referring. Is it right? We are verifying. Is it? We are verifying. We are making a reconfirmation. With respect to what? With respect to sales invoices. Is it? It has been done under the name of the entity. Then only they can make a presentation. All disclosures required have been whatever the disclosures in terms of when say disclosures, make it very clear. Is it? What is the policy of receivables? Policy of receivables in terms of credit policy. Understand point? Policy of his credit policy. Policy of the receivables in terms of sales discounts. Is that policy of the payables in terms of provisions? Is that everything has to be disclosed? Is that we cannot say that yes there should be which policy? Is that which policy? That's what it says. If you are saying that what they are saying, don't talk. We have to specify policy with respect to the credit policy, with respect to credit limits. Is that see the thing? What will happen? You are talking in terms of credit limits also. Is that we are talking about in the credit limits also? Is that we are talking in terms of selling to the approved? Is that approved? The people who are selling to the approved. What we have to do, one minute. The people to approved clients. Okay, we have to have a very clear policy with respect to approved clients also. these disclosures has to be done. Okay, then only it makes all disclosures required has been included. Financial information is appropriately presented and described, clearly expressed in terms of classification in terms of number of days. Is that we will do this? Is that we are doing what we will do in terms of aged receivables? Is that we are talking in terms of classification in terms of amounts? Okay, in terms of amounts. Is that classification in terms of recoverable? Is that recoveries? Is that which receivables from where we are getting delayed recoveries and from where we are getting where they are having a huge amounts are there to be recovered. Is that understandably? Financial and other information is disclosed fairly and in an appropriate amounts in terms of accuracy and classification. That the three things are there. Okay, the three things we are talking in terms of simple, very easy scoring area. If they give receivables, they will ask very simple. They will ask about they will give some deficiencies in terms of credit policy, some deficiencies in terms of the recoveries, some deficiency in terms of placing the orders. Is it some deficiency with respect to not following the listed procedures to whom we are going to sell, or more importantly, a lower level person is giving the discounts and without the approval of the higher level people. Yeah? These are the common areas where we can have a understanding. Fine. Are you clear about this?
Yeah.
Yes, Gayatri. Yes, Gayatri. Is it okay? Where are you? Gayatri, where are you?
I am here, sir.
Fine. Okay. Now, when we talking about the completeness, okay, first and foremost, the balances, individual sales ledger accounts to the aged receivables and vice versa. First, what you do, see the thing, this is what happens. It's the take your own, I am giving you from your own perspective. Okay, you will have multiple clients will be there, individual accounts. Is that individual? What you will do, you take the individual accounts and you will make the total of that. You will agree whether individual has been agreed to total. Again, what you will do, you will take the total and back to individuals. See how it happens. You have lot of doubts at the time of entry. Is that at the time of entry we will go from top to bottom. At the time of verification you will go from the end to the beginning. Is that you will say the two different people are doing this. Is that two different people are doing this to make sure that it has been complete. What do you mean by aged receivables? Any idea?
showing for how long the balances maintained with the company
How?
received.
Again?
It shows for how long the outstanding balances of receivables outstanding without
Yes,
receiving.
exactly, exactly. How long we are not recovering. Is it? Whenever we are talking in terms of receivables, maximum days is 90 days. You take the example of a credit card. Is that you take the example of a credit card. When you are taking the example of a credit card, the first within 545 days you have to pay. Fine. If you are not paying, you have to pay some minimum amount. Minimum balance you have to pay. Is it? Next. What have we have in order to keep it continuity? Okay. Sometimes what will happen? You are not paying for first 45 days and the customer will not pay for the next 45 days also. Automatically what will happen? The 90 days it automatically they will block the card. Fine, they will block. This is where aged receivables. And aged receivables will be there. Okay, aged receivables will be there. There are some non-recoveries. There are some delayed payments. There will be some restructuring. Is that you will have some restructuring. Match the aged receivables listing to the sales ledger control account. You are saying that X is having 15,000, Y is having 20,000. Then you will go that and you'll say that yes, how much you are going to have, the total is how much? Total is 350. Is that aged? We are listing the aged receivables and we are matching with what? We are matching with sales ledger general account. Is that again very specific? X, Y, Z. Is that X is going to pay 10,000, Y is paying 20,000, Z is going to pay 11,000. Okay. What will happen? You have to make sure that it has to be agreed with the sales ledger control account. Individual balances. Cast and cross cast the trial balance before selecting any samples to test. First get 100%, make it that yes, everything is complete. Is it? Cast and recast. When you are doing the thing, you will do the totals as per the rows. You are doing the totals as per the columns. Everywhere. Once it's done, then before that you have to say, because once you are selecting the sample, we have to select only those specific samples which comes under the category of aged receivables, which are silent for a longer period of time. Take the sample of shipping documents. Shipping documents, delivery, dispatch, okay, delivery, dispatch to the sales invoices into the sales and receivables ledger. Is that what we are doing? Completeness. When you are talking about the completeness, take the documents. Is that the shipping documents? Is that we have to make sure that we have done these transactions. If tomorrow the client will come and say that we have there is no evidence for that, then you have to say that there is a shipping document is there. There will be a sales invoice is there. Is that? And subsequently you either you are going to show in the sales or you are going to show in the receivables ledger. Complete that disclosure checklist to ensure that all the disclosures relevant to the receivables have been made. What happens? Complete the disclosure checklist. Whenever a sales invoice, a purchase invoice will be raised, the purchase or the sale invoice will be as per the 4 copies. This has been This has been a standard procedure which you are going to make. Is it right? One copy you will keep it with the inventory. One copy you will send it to the accounts. One copy you will send it to the client. Okay, one copy you will send to the client and one copy you will send it to the sales department. This is what we have to make. When we are sending the things, you should know that whether we have taken all the documents into consideration. In some cases, what will happen if there is any analytical procedure? That's what I told you. Either you are comparing gross profit by product line. Either we will compare with the previous year, we are comparing with the industry. Why we calculate gross profit? Any idea?
To test the receivables turnover ratio.
Pardon?
To assess the receivables turnover ratio.
And?
Overstatement or understatement of revenue.
Overstatement or understatement of what? Overstatement or understatement of revenue. Is it overstatement or understatement of revenue? Compare the level of prepayments. Everywhere there will be a advance payments. Okay, everywhere there will be a advance payments. What is the general entry we will write? If you have a understanding about the advance payments, automatically what is the general entry you will write? Assume there is a sale. Is that sale is going to be 10,000? Is it right? Advance payment is 1,000 and the balance is the receivables is 9,000. Then what is the general entry you will write?
Can you repeat please?
There is a transaction. Is that there is a transaction where the value of the sale is 10,000, advance you have received is 1,000, and the receivables going to be received in future is 9,000. If that is the case, what you will write? Debit, debits or credits?
Credit 10,000.
Credit will be sales. Okay, credit will be sales. Debit will be receivables. Is that debit will be receivables 9,000 and debit will be cash received in advance. How much? 1,000. Anywhere, anytime you will find difficulty. Anywhere, anytime you find that understanding is little bit taking time, immediately what you will do, you will convert it into a general entry. 99% our understanding will be clear. Compare the level of prepayments paid in advance to the previous year to ensure that the figure is correct, materially correct and complete. Because settlements will be there. Now you see the thing. They have this one. Next they are going to receive it. Is it right? They are receiving cash. What will happen? Debit will be cash 9,000. Credit will be receivables. Is it? Debit will be the cash, credit will be receivable. This is the way. Every time there will be advance payments, paid in advance. Okay, paid in advance. Is it? If any prepayments is there, you have to be very, very cautious. Review detailed statement of position that all prepayments have been included. What they are mentioning, the only thing that mattering to us is with respect to what? With respect to prepayments. As we know, existence is the most simplest of the one. Okay, you have to get the confirmation on a sample basis. Is that confirmation on a sample of year-end receivables? Once you get the confirmation, both sides are agreeing. Okay, both sides agreeing totally. And then once you are saying agreeing totally, then only it says that there is a existence. There will be some disagreements will be there. There will be some differences will be there. Is that? There will be some reasons for these differences. There will be some specific reasons for these differences. That has to be sorted out. We should not carry forward for a longer period. Follow up on our balances disagreements. You have to, any disagreements you have to follow. Any non-replies also we have to follow it up. Is that you are sending a file sample of basis? Is that if you are not getting replies, definitely see what happens. Just give me a point. What you can understand with respect to non-replies? Non-replies is either it has been agreed, then only I will keep quiet. Is that? I will keep quiet if it is agreed, or it has been disagreed totally. There will be some reason. When there is agreed, we don't have that much issue. When it is not agreed, then it is a big question mark. Is it? That is the reason. Is a positive confirmation, negative confirmation. We will cover this in the later stages. Is it right? We are going to cover any non-reply. Perform procedures for exceptions and non-replies. Why you are not getting replies from the clients? Is it? Why they are not getting the replies from the client? Review any after date cash receipts are there. You have to review whether we have received anything after December 31st. Is it? How you are going to say? By inspecting what? By inspecting the bank statements. Yeah, or cash receipt document. Examine the customer account and correspondence, whether the balance outstanding is for any specific invoices. You are doing you are sending, assume you are sending 50 invoices. In 50 invoices, there will be some invoices, there will be a disagreement. Is that? There will be some disagreement. You have what you have to do? You have to get the correspondence for that. Which invoices have specific disagreement? Examine the underlying documents. What are the things you are talking in terms of purchase order? You are talking about the dispatch documents. You are see the thing. Duplicate sales invoices. Is there any duplicate sales invoices? Is that if maybe you have sent 2 invoices. Is that you have sent, maybe you have sent invoices on request, but what will happen? That requires, there will be error. Is that invoice will be added twice, and that invoice will be not taken only for the one time in either of the cases. Is that? That is what any duplicate invoices. Inquire from management for explanation for invoices remaining unpaid. What are the reasons? After once the subsequent ones have been paid, what are the reasons why we are not recovering from the client. Observe why, because again I am saying, if there is any issues on receivables, it is also going to affect what? It is going to affect the going concern. It is affecting the going concern. You are not getting receivables, it will affect your liquidity position. Observe whether the balance on account is growing. If so, discuss. What happens? See the thing. The receivables amount, is it right? The receivables amount, day in and day out, year on year basis, it is increasing. Is that? It is increasing. Fine. We can take it. We can take it that yes, because the sales has been increasing, the receivables is also increasing positively. But what will happen? The receivables amount, is that the sales is increasing. Is that the sales is increasing? What will happen? The recoveries are decreasing. Is that the sales are increasing, but in turns what will happen? The recoveries are decreasing. Is that the recoveries are decreasing? Maybe we have done, if I remember rightly, maybe we have done 1 or 2 questions which are related to receivables. Is that? These are the things in terms of what? In terms of existence means, if you are showing in the balance sheet, there should be a complete evidence with respect to that it has been existed, not only from internal sources but also from the external sources. What are the rights? Inspect the bank confirmation letter from any liens in receivables. What does it mean, lien? Any claim. See what happens. Keep it in mind. You have to be. If assume if I have taken a car, if I bought a car on loan, okay, if I bought a car, I have got it from the bank, the registration will be under both the names, okay. Once I have repaid completely, is it, then the ownership, is it, the ownership will be transferred. Till I have not paid, is it, till I have not paid, the ownership will not be transferred. Bank will give a confirmation letter when you have repaid your loan. Is it? When you have repaid, bank will be a confirmation letter that it has been, the receivables has been settled down. Is that? Bank will give a letter that no, these receivables have claims. Inspect the bank confirmation for any claim on the receivables. It's a very simple case. Is that? It's a very simple case. When you just imagine you have a salary and you have taken a loan. You cannot transfer your salary to another account. Is that? Unless the bank will give the clearance. Why they say we are talking about the no NOC from the bank? When we say no NOC from the bank means we don't have any claims, we don't have any loans. Is that? We are not owning anything to the bank. Then only the bank will give a confirmation letter. Inquire with the management whether receivables has been sold. Example, to factors. Any idea about factor or factoring? Yes or no? If it is no, I will explain you.
No.
You have any idea?
No.
Yes, guys, any idea?
No, sir.
People are very smart when they do the business. Okay, very smart. Everyone is, especially what happens, listen carefully. You are doing the business, is it? You are doing the, assume you are in the any business. Okay, you are selling it on credit. When you sell it on credit, assume the amount which you are going to sell it is 1000. Take an example. You are selling it for how much? You are selling to 100 customers. Is it? You are selling to 100 customers. Just imagine how the things will work in real life. If you take every month, you will get how much? You are getting from 100 customers. Assume every month. I will take every year. Okay, why we have to take? We are taking that it is for how many years? We are taking it for 5 years. 5 years. Every year 1000 means 5 into 1000 into 5, 5000, 5000, 5000 and 2 zeros. How much the amount you are going to receive every year? Total in 5 years you will get 500,000. Every year you are getting how much? 100,000. 100 will get every year. Huh, 100 will get every year. Yeah, 100 will get every. Now what happens? See the thing. This is the factoring. Okay, I am explaining you something with respect to factoring. What you will do? You have 500,000 checks are there, post dated checks. Is it? You have a post dated checks. Post dated checks will never get rejected. If it is rejected, it is a crime. Okay, post dated check. You have the post. What you will do? You will approach a bank. You will approach a finance company, and based on the risk, who is taking the risk, it all depends on that. Assume you will approach the bank and say that I am having the amount of $100,000 every year for 5 years, $500,000, and you want to convert into cash. Bank will say that okay, they will charge some $10,000 as a commission, and they will pay you back based on the risk. If the risk is high, they will charge more. Is it? Now, what the bank will do? Bank will classify. If there is non-recoveries, they will give back to the person whom, where in that case the risk is very very less. If non-recoveries, the bank will take the risk of recovery. Here what will happen? The risk is very very high. The risk is high. This is called as factoring. Inquire with the management to ascertain. I gave you a very short description about this. Is it? This is a very short description. Inquire with management to ascertain whether any receivables has been sold in terms of factors. This is the factor processing. Inspect any loan agreements, meetings for any evidence that the receivables has been sold. Any agreements or minutes are there where the receivables are sold to factors, because that's the most important thing. When you have sold to factors, what are the terms and conditions? Determine through discussion with management any receivables has been pledged, assigned or discounted. Is that any receivables has been pledged against any any sales, is it right? Against any condition, or it when assigned it, or some what happen, the it will be discounted, is it right? It will be discounted as per the time value. They say that yes, we are recovering for how many years? We are recovering for over a period of 5 years. Definitely, when you are recovering for the period of 5 years, the rule says that the initial value will be in terms of a present value. We are recovering over a period of 5 years. What will happen? Time value of money. The time value of money, the value of receivables will decrease. Any discount rate is applicable. Any discount factor we are using. Any rate of interest we are charging on the receivables. It will happen, is it right? If you are going to make sure that what will happen, see the thing, 0 days, is it right? 45 days, 60 days, 90 days. If it is 90 days, no discount. If it is for 0 days, they say that we are giving 10% discount. Here we are going to say we are giving a discount of 6%. Here we are giving a discount of 3%. Yeah, these things, that is the reason what we are doing. Whenever you are doing, you will say sales minus discounts. All the things means the procedure has to be worked out in detail. Is it? This is one. What is it in terms of valuation? Compare receivables turnover and receivables days to the previous year or the industry data. Compare aged receivables from the aged trial balance to the previous. What is the? Yes, tell me please.
Yeah, I'm good.
Is it? What is the aged receivables current year and what is the aged receivables previous year? What is the how much you have to make the allowance for uncollectible? What is the percentage of allowances? See, every bank will have a credit ratings. If provisions are increasing, is it? If provision for credit losses, if provisions for credit losses are increasing, what will happen? The credit rating will decrease. Is it? The credit rating will decrease. This is what we have to say. If we are going to say that creating an allowance is not a good sign or it is a good response the client is doing. Compare irrecoverable debts expense as a percentage of sales. Again we can say how much is the losses from the previous year to the current year and to the industry data. Percentage of irrecoverable receivables to the percentage of sales. Compare the allowance of uncollectible as a percentage of receivables. Is a percentage of percentage of irrecoverables to sales, percentage of allowance to the receivable. That is the reason what we are doing. We are calculating the percentage based on the receivables amount, not on the based on the sales. Okay, we are creating a provision on the receivables amount. Confirm adequacy of allowance for reviewing correspondence with customers. We are not only to talk about the provision. See, when you are talking about the provision, is it right? Which concept we are using? We are using the concept of prudence. Is it? We are using the concept of prudence. We are taking all precautionary steps. Okay, we are not aggressive. We are taking all precautionary steps. We are estimating possible, is it? Possible losses. That we are estimating possible losses. But the possible losses should not be overestimated. Is that? Examine credit notes. What does it mean? Any idea? Yes or no? When credit notes
It
will
is
be
a
issued?
note issued if there's any amendment
Any?
or mistake in invoicing or something.
When you will receive credit note, just tell me. Assume you have. What will
They're going
happen?
to amend the value of the invoice.
Whenever there is you are purchasing, is it right? You are purchasing and somebody is selling, is it right? You will go back and say that I want to return these goods. Is it? They will not pay you cash, no cash back. Is that? They will not pay no cash back. What they will do? They will say that okay, you return. They say that yes, within 7 working days you are doing. They mention very clearly in the sales invoice at the bottom of the bill that no refund of cash. Something similar to this, no refund of cash. If you want, you can exchange the goods, but there is no refund of cash. If you are not refunding the cash, in that place, what you will do? You can exchange it. Is it? For that, they will issue a credit note. Is it? Examine any credit note issued after the year for allowance that should be made against the current period balances. Means you have any sales returns are there. For sales returns, understand what? For any sales returns, the appropriate there will be a credit note. In the sales we will use credit note. In the purchases we will use debit note. Examine large customer accounts individually and compare with previous balances. That is the limit. What we'll do in all the cases, we will fix credit limits. Is it right? We will fix credit limits. Once we are fixing the credit limits, definitely we are saying that we are not going to exceed a certain amount of so that in future we will not find any difficulty. If you don't fix the credit limit, definitely we will not have any benchmarking. For a sample of old debts on the aged receivables, obtain further information regarding the recoverable amount. Okay, regarding the recoverability by discussion. See, when there is a aged receivables, what happens? Nobody will write off. Even you are talking about a bank or anything, they will take how many years? Usually there is a accounting policy that minimum 7 years, minimum 4 years. We will try our level best to recover the amount from the aged receivables. For a sample of prepayments, is it? From the prepayment listing, recalculate the amount prepaid to ensure that it has been accurately calculated. Means we are not talking in terms of the shortcomings. Is it? Definitely. Also we are talking in terms of anything paid in advance. Is it? We have to look into that. That at the end of the day, how much they have prepaid. Is it? How much they have paid in advance. So that it will affect the settlement of amounts. Understand that? The prepayments what will happen? It will have effect on settlements. You are making a sale in the month of November. Is that? You are getting the advance in the month of November. But the 90 days, take the 90 days. Or is it? On 30th January, you are making a settlement. Is that you are making a settlement? The amount, the sale happens in November. Is it right? The sale happens in November. Is it? And in the November you will have the receivables. Whereas in the month of January 30th there will be a cash payments. Fine. If the deal is very straightforward, okay. But what will happen? Here they will give you an advance. Here they will make a settlement. These are the core aspects of auditing. Understand? These are the core aspects of auditing. You will come across something which we cannot have imagined also. See the thing, how much they are giving importance to aged receivables. Review aged analysis of receivables. What are the large credits, non-trade receivables and long-term receivables, and consider whether such items require separate disclosure. Sometimes what will happen, it's a fact, you have a large credits. You are giving large credits, it will be difficult for recovery. Is it? You are talking in terms of non-trade receivables. You are selling it. See, we cannot say that the person is not paying. He is taking the goods from us, but he is not in a position to sell it. Market conditions are not as per the requirements. Okay, the market conditions are not conducive. Market conditions are the moment there is a products are changing, the fashion, the expectations, they will become outdated. Automatically they will not be in a position to sell. What another way? Think the practical terms. You are selling in the month of January. Is it? By the month of June, May, things will work. But after May, it start declining. That is the reason. See the thing. What they will do, the people are very clever. They say that it is a clearance sale. They say it is 70% off. Means if you are not recovering 100%, at least you are recovering how much? 30%. You are reducing the loss. Is that? You are reducing the loss. That's the best. And automatically your receivable should not, your payable should not increase to the other party. Okay, a minimum you have to be within the margin. Read the disclosure notes relevant to receivables in the financial statements and understand how it is going to be worked out. All through the time they are focusing on this word also. Fine. This is with respect to what? Classification. The next one, what we are talking about, the cutoff date. For a sample of invoices of around the year end, inspect the dates and the dates of dispatch, and the dates has been recorded. Now, when you have dispatched it, when you have recorded it, is it? So that we are dispatching today, you have to record today. You are dispatching tomorrow, you have to dispatch correct date. Is it? We are not talking about within the month. The only issue that comes up, that crops up always is what happens on 31st December and the next last 15 days and the next 15 days. Any returns are there for sales data, sample of returns documentation. Is that sample of any sales? Returns are very, very specific. Is that we are not talking about small. There is a huge machinery. There will be a huge equipment, huge value of goods. As simple as that. Huge value of assets. Is that there is a huge value of assets and it had been returned back, you have to have a complete documentation, so that you should have a related credit entries and you can issue a related credit notes. Perform analytical procedure. How much? What is the sales returns? What is the sales returns? What means? Why we are doing this? It is also not a very positive that we are getting sales returns. Okay, sales returns, if it is, or if the frequency or the amount of sales returns is increasing, definitely what will happen? It will impact on your sales, and subsequently it will impact on your receivables. Review material after date invoices. Review material after date invoices, any credit notes and adjustments, and ensure that they have recorded in the relevant financial period. Is it okay with you? We just quickly go through it, okay? We just quickly go through it. We are talking in terms of, now we have for the accuracy a little bit, I am telling you in advance, a little bit more quickly we will go through it. For a sample of invoices, compare the prices and terms of the authorized price list and terms of documentation. Here, test whether discounts has been properly applied and recalculating them for a sample of invoice. Test for correct calculations of tax on a sample of invoices. Means we are talking in the first, we are talking in terms of prices. The second, we are talking in terms of discounts. The third, we are talking in terms of taxes. For a sample of transactions recorded in the ledger, watch whether the sales invoice back to the customer orders and dispatch documents. Is that when we are talking in terms of sales transaction, we have to think in terms of invoice and we have to think in terms of dispatch. Yeah, confirmation. This is little bit, okay? This is little bit. We'll complete this and we'll stop, okay? We'll complete this and stop. What happens? We have to get the confirmation from the third parties, from our clients. Provides third party audit evidence. What is the amount outstanding? Is it whatever the only we have to get the confirmation from the third party for the amount outstanding. As simple as that. It is therefore an excellent source of audit evidence because from external party. It provides audit evidence about what there is existence and there are the rights and obligation. We right to receive and obligation for them to pay. It does not provide audit evidence about valuation. It don't talk about valuation. It talks about only what it talks about the existence. External confirmation is obtained direct response from the auditor or the third party. Is it? Confirmation is essentially an act of the client who alone can authorize third parties to means it gives you a authority to get the get the end result or end balances that agreed by both the parties. There are two methods. One is positive, one is negative. We'll focus this and we'll work on this. That's all. Is it? I just want to, what is the positive and what is the negative? What should the auditor do if the client does not give permission for receivables? As we are when we are getting the confirmation from the bank, we have to be in principle with the client's awareness. Okay, inquire management why they are refusing to give information. Client has to give permission to communicate with the external party who is going to pay us. Seek evidence whether the validity and reasonableness of the reasons for refusal. If they are refusing, the client is refusing the auditor to approach. What are the reasons? Evaluate the implications of refusal. If definitely it will have impact on materiality, that has to be taken care of. Perform alternative procedures. Fine. If you are not getting, we should not give up. What are the alternative procedures? Communicate with the people who are charged with governance and consider implications. Definitely, it will have impact on what? It will have impact on the auditor's report. Because we are not getting sufficient and appropriate evidence. We are not getting sufficient. A positive confirmation request is one. The confirming party responds directly to the auditor that they have agreed or disagreed with the information. Focus on this, okay? I am putting star mark here. What is the positive confirm? They will ask. There are few questions are there. Is that differentiate between positive confirmation and negative confirmation. Positive confirmation means you are agreeing the balances. Is that you are agreeing or disagreeing with the balances. Is a positive. What is the negative confirmation? You are confirming is one in which the confirming party responds directly to the auditors if they disagree. Now, what is the difference? See, in the first case, the indicating that they will agree or they will say they will agree or they will disagree. Negative confirmation is that they will only respond if they disagree with the information in the request. Again, there is a clear cut will say that you just think we don't have agree. Response to the auditor indicating whether or disagree with the information. Is that disagree with the information? In other case, positive information means you are agreeing with the balances. Negative confirmation is you are disagreeing with the balances. Very simple, very straightforward. The positive method is generally preferable. When we are using the negative confirmation, see, people will not respond. In some cases, the people who has to pay to us, they will not respond. Right? If there is a negative, the negative method is only used. The risk of material statement has been assessed as low. The risk of material misstatement. You are assessing Your assessment is not as specific as it has to be. Is that? Then there is a negative way. The auditor obtains sufficient appropriate evidence on the operating effectiveness of relevant controls. See, when you are talking, see, negative method, you are getting the complete, the accuracy level will be more here. The accuracy level will be more on the higher side. They are getting up. They are very pinpointing. They are very specific. They are identifying the things as specific as possible. Automatically, what will happen? It will have its impact on the other party. The population consists of large number of small homogeneous account balances. Is that account? The first statement and the third statement compare. The material misstatement has been assessed as low, means there are small parties are there. Is that there are small parties are there? The amounts are very small, homogeneous. Is it? Now what happens? Definitely people tend to ignore. I'm not saying that people will ignore. Tend to ignore. Okay, you will ask if somebody has a sale of 1000, he has paid a amount of 950. Is that paid an amount of 950? Only 50 reals is there. You will ask once, you will ask twice, you will ask thrice. But what will happen? If these going to be individually, it will be aggregated, it will be a material misstatement. A very low exception rate is expected. Exception cases are very less. Most of the cases are similar in nature. The auditor is not aware of the circumstances that could cause customers to discard. Is not aware the see, you don't expect that everybody will give you confirmation. Every other party will give us confirmation also. We cannot expect that. Financial problems. This is the reason. That is the reason when what we are doing, whenever there is a sales, is it? Whenever there is a sales, you will have a very specific controls on the sales. On the sales. This is when you are talking about when the client will disagree with the amount. Get you that? The client will disagree with the amount. The disagree with the amount can happen in multiple cases, such as you have delivered the goods, but the goods are not as per specification. You have delivered the goods, but the goods are damaged. You have delivered the goods, but the goods are not as per the pricing factor. There are multiple ways. Okay, what are the specific ways where there is a negative confirmation? Most importantly, they say that points to be noted about confirmation. The letters are normally prepared by the client staff on the client's paper and signed by the client. Is it? It has been prepared by the client, means the auditors is only a part of that activity, but everything will be done on the clients, on behalf of the client. The auditor must maintain strict control in the process to mitigate the risk. Is it? The auditor has to have a strict control. Means very in terms of means you should not have any, you cannot have any compromise. Fraudulent manipulations, is it? It will happen. See, as simple as that. If people are there who will write off, people are there who will write off. People are there who will say that yes, I want to give 5 million, I will take 1 million. Is that there will be a fraud that yes, they will settle the transactions separately, and they say that on paper they will give only 1/10 of the contract price of the sales price. Is that a copy of the statement is included with the letter, a copy of the receivables statement listing of the client, okay, is include supporting document. Customer must send replies directly to the auditor on a prepaid envelope. For most of us, this is a very new thing. But when you say, I will say, when you are sending a request to the customers, is it right? You will pay the courier charges also. On behalf of the customer, paid in advance. You are paying the courier charges in advance, so that the customer will not do anything. Customer will will write the confirmation, respond to the query, and he will give the confirmation, put the things, and he'll send you back. Undelivered items should be returned to the auditor's office, not to the client office. If any couriers has been not delivered, it has to go to the auditor's office. It should not go to the client's office. Is it? It should not go to the client's office as such. We'll complete 8. We complete these 2 and we'll stop. Okay. I know I'm taking a little bit time on this, but see the how the auditors should select the receivables. Is that what is the criteria? Old and unpaid accounts written off during the period which has been written off. Accounts with having a huge credit balances. Accounts settled by round or sum payments. Is that rounding off the accounts? Okay. Accounts with nil. If it is a nil balances also, you have to get a reconfirmation that the balances are that it has been settled down. Accounts which have been paid by the date of the examination, as on that date it has been paid, at the last moment it has been paid. For those accounts also you have to get reconfirmation. What should the auditor do if reply is not received? A non-response is failure the confirming party to respond or fully respond to a positive confirmation. Is that what the auditor has to do? Send an additional confirmation request if a reply has not been received within a reasonable day. Phone the customer with the client's permission. See, everything auditor has to keep it informed. Is that to request the reply. The auditor may have to do alternative work to gain the evidence about the balances, what we have received after date cash, any shipping documents or any sales. Means if you are not getting the confirmation, you should have the alternative. You have to initiate, you have to think about alternative procedures, how we can provide sufficient and appropriate evidence. What happens if evidence shows a different amount to that of the client? Is that there will be a difference. Exception is a response. It is a called as an exception that shows the difference between information requested and the response which we are going to provide by the confirming party. We are giving one amount, they are giving us another amount. Is that the auditor will need to do further work. Is that reasons for exception, disagreement of balances, any cut-off issues are there. Is that any cut-off issues are there? Money received posted to the wrong account or cash in transit. Any netting of balances are there by customers who are also suppliers. As a matter of fact, netting is not permitted. Is it right? Netting is not netting is nothing but I am selling you 100,000 reals and you are selling us 900,000 reals. Okay, you have to, when you are selling, you have to receive and he has to pay. People should not say that okay, there will be sales of 1,000 and the purchase of 900. We are settling down and say that okay, it is only 100 reals we have to transfer from one person to another person. That process should not be initiated at all. Fraud, teaming and leading, stealing monies, incorrect postings. Is that fraud? Teaming is nothing but collaboration with the people within the organization, and just we are making sure that the receivables can be manipulated or adjusted. Is it okay? Can we continue this? Can we continue this? 1 minute. Nothing is there. Okay, just for a while. Okay, 1 second. We'll finish it off. That so that receivables will be completed. Is it? Please. You have obtained the following results. Balances. Okay, balances as per the 25 balance per sales ledger. Balances by the response. There is a cash in transit. Balance by another company, 55,000, 45,000 good notes received at the year end. There is a balance of 68 and the balance of 57. There is a dispute invoice. One is cash in transit, one we have not received, one there is a dispute. Is it? Details of test you will perform. Is it? When a cash is transit should be traced to the receipts book, and when it will be received within few days of the year end when we are going to receive it. I would also trace the cash to the bank paying slip when you have deposited the cash. Okay, when it has been again this should be stamped by the bank. At least we know that the amount has been deposited. The goods in transit should be traced to goods dispatch note. When there is a dispute with respect to the goods not received, okay, then you have to say whether it has been dispatched or not. If the inventory record exists, that the dispatch is traced to the records to confirm that it has been sent. If there is inventory department saying that we have dispatched the goods, then we can confirm that yes, it has been done, and that is one of the reasons that is the goods are in transit. The last one, there is a dispute, and most of the cases we will come across this thing. The reason for dispute is it should be obtained from the reason for the dispute and my client views on it should be obtained from the correspondence file between the other party and the client. What is the reason for dispute? When there is a dispute, credit notes post year end should be scrutinized. You have to scrutinize the credit notes, whether we have issued any credit notes or not, whether a credit note was given to the goods. Cash receipts should be received post year end, whether they have paid the full balance. If they have not paid the full balance, it means there is a dispute. If they have paid the full balance, then there is not a dispute. And last, if the amount is outstanding at the date, discuss recoverability with whom, with the how we are going to recover with a specific person. Here we are not using the word charge with governance. When there is a receivables, the issues we are going to work out with whom? With the credit controller. Fine. This is a very detailed fact with respect to receivables.